Lalithaa Jewellery Mart is launching a 1700 crore IPO. That includes 1200 crore in new shares and 500 crore from the promoters selling their existing stake. An IPO, or initial public offering, is when a private company allows the public to buy its shares for the first time. It helps the company raise money, and gives people like you and me a chance to invest early. This IPO will follow a process called book building. The company sets a price band, and investors place bids within that range. The final price is decided after the bidding closes. Right now, the price band is not announced because SEBI has not approved the final documents yet. Once it is approved, the company will declare the official price range, likely just a few days before the IPO opens. Based on similar IPOs in the jewelry sector, the expected price range could be between 190 to 250 rupees per share. But remember, this is only an estimate, not confirmed. The IPO is divided into 3 investor categories. 50% is reserved for qualified institutional buyers, or QIBs. These include big mutual funds, banks, and financial institutions. 35% is reserved for retail investors. That means everyday investors like you and me. And the remaining 15% is reserved for high net worth individuals. Now about the company itself. Lalithaa Jewellery was started in 1985 in Chennai. Today, it has 56 stores across South India. In the financial year 2024, the company earned 12,595 crore in revenue and 262 crore in profit. That profit grew by over 50% compared to last year. The money raised in the IPO will mainly be used to open 12 new stores in India. Around 1,014 crore is set aside for expansion. The rest will be used for general business purposes. The IPO is managed by Anand, Rathi and Equirus Capital. The Registrar is MUFG Intime India. A Registrar is a company that handles IPO allotment, refunds, and listing support. So what are the positives? First, the company has shown strong revenue and profit growth. Second, they are expanding into new regions, using the IPO funds directly for business development. Third, a 50% QIB quota shows that big institutions may have confidence in the company. But there are risks too. Jewelry is a seasonal and gold-dependent industry. If gold prices rise too high, it can reduce demand. Expanding too fast can hurt profitability if the new stores don't perform well. Also, if the IPO is priced too high, there may be weak listing performance. How to apply? You need a Demat account with a platform like Zerodha, Grow, or Upstocks. During the IPO window, apply using UPI or ASBA through your bank. Once the IPO closes, you can check your allotment status on the MUFG Intime India website. Final thoughts. Lalithaa Jewellers is a well-known brand with a strong presence and solid growth numbers. If the pricing is fair and the listing sentiment is good, it could be a promising investment. Let me know in the comments, are you applying or waiting? And subscribe to Market Maven for fast IPO updates and clear stock market insights.